ConocoPhillips $1.3 billion Anadarko sale to Flywheel and Stone Ridge Energy deal breakdown. ConocoPhillips nears $1.3 billion Anadarko sale to Flywheel, Stone Ridge Energy. ConocoPhillips, https://www.heartenergy.com/company/ConocoPhillips-co, is in talks to sell Marathon Oil, https://www.heartenergy.com/company/marathon-oil-corp. Oklahoma assets to Stone Ridge Energy for around $1.3 billion. The parties are in advanced discussions for the Anadarko Basin assets, but a deal is not guaranteed, multiple sources told Hart Energy. Private E&P Flywheel Energy, https://www.heartenergy.com/company/flywheel-energy-LLC, which is backed by Stone Ridge, would operate the Oklahoma assets if a deal is closed. ConocoPhillips declined to comment. Hart Energy has reached out to Stone Ridge and Flywheel for comment. The marketed Marathon Oil package includes approximately 300,000 net acres in Oklahoma SCOOP and STACK plays. Recent production from the assets averaged around 39,000 barrels of oil equivalent per day, 50% natural gas, sources said. ConocoPhillips picked up the legacy Oklahoma assets through its $17.1 billion acquisition of Marathon Oil last year. When announcing the deal, ConocoPhillips laid out plans to raise $2 billion for debt reduction through non-core asset sales. ConocoPhillips tapped financial advisory firm Moelis & Company, https://www.heartenergy.com/company/moelis-co, to market the Oklahoma assets, Hart Energy reported in April. Over the past decade, the Anadarko Basin has taken a backseat role. https://www.heartenergy.com/exclusive/midcoin-momentum-scoop-stack-plays-new-zones-draw-interest-2103000 to more prominent U.S. plays, like the Permian, Haynesville, and Appalachia. Falling oil prices and over-leveraged balance sheets pushed several Oklahoma E&Ps into bankruptcy, while many others exited the basins in pursuit of better returns. A few producers stuck with the Anadarko through the downturn, like Continental Resources, https://www.heartenergy.com/company/continental-resources-inc, Devon Energy, https://www.heartenergy.com/company/devon-energy-corp, and Marathon Oil, which has been active in Oklahoma for well over a century. But with natural gas prices climbing and drilling inventory dwindling elsewhere, experts say the mid-continent is seeing renewed market interest, particularly among private E&Ps. Validus, backed by Elliott Asset Management, https://www.heartenergy.com/company/elliott-management-corp, has deployed over $3 billion into Anadarko Basin M&A over the past year. Private E&P Canvas Energy, https://www.heartenergy.com/company/canvas-energy-inc, has also explored a sale of its mid-continent assets. Canvas, which rebranded from Chaparral Energy in 2022, https://www.heartenergy.com/exclusive/oklahoma-shale-driller-chaparral-rebrandz-canvas-energy-1998806, held 223,000 net acres in the Anadarko as of second quarter 2024, according to investor materials. Camino Natural Resources, https://www.heartenergy.com/company/camino-natural-resources-LLC, had been exploring a sale in the range of $2 billion but pulled back from a marketing process. https://www.heartenergy.com/exclusive/midcoin-steps-back-2b-midcoin-sale-process-sources-2125540. Denver-based Camino holds approximately 135,000 net acres in the core of the Anadarko and is one of the top producers in Oklahoma. Camino is sponsored by private equity firm NGP, https://www.heartenergy.com/company/inp-energy-capital-management-llc. Related, Flywheel Energy acquires Terra's Colorado Pacines gas assets. https://www.heartenergy.com/exclusive/flywheel-energy-acquires-terrace-colorado-pacines-gas-assets-2135535. Stone Ridge, Flywheel. Investment firm Stone Ridge Energy has a growing U.S. upstream arm. Stone Ridge announced its acquisition of Winkerim Asset Management earlier this year, adding deeper upstream exposure. Winkerim was an investor in Pure West Energy, https://www.heartenergy.com/companies/puruest-energy-llc, and manages around 1,600 gas wells on behalf of Winkerim. Flywheel has been expanding its U.S. gas footprint. This spring, Flywheel took control of a large natural gas asset, https://www.heartenergy.com/exclusive/flywheel-energy-acquires-terrace-colorado-pacines-gas-assets-2135535, in Colorado's Pacines Basin from Terra Energy Partners. https://www.heartenergy.com/companies/terra-energy-partners-llc. Terra was the top Pacines gas producer as of December 2024, with gross operated production of over 550 million cubic feet per day, according to an Energy Advisors Group analysis. Flywheel is also a major producer in Arkansas's Fayetteville shale gas play. Last year, international commodities trading firm Gunvor, https://www.heartenergy.com/companies/gunvor-group, reportedly acquired a 41.67% stake in Flywheel's holding company, securing marketing rights to 500 million cubic feet per day of production. ConocoPhillips nears sale of Oklahoma assets to Stone Ridge Energy, a comprehensive overview. In a potential game-changing move, ConocoPhillips seems poised to sell its Oklahoma assets to Stone Ridge Energy for a staggering $1.3 billion, according to insider sources. This transaction is not just a mere financial shift, it represents a significant chapter in the evolving landscape of the oil and gas industry. Could this be a turning point for ConocoPhillips? The Oklahoma City-based Flywheel Energy, an independent oil and gas firm backed by Stone Ridge Energy, is set to manage these assets on behalf of its investor, a source revealed. This relationship highlights an ongoing trend where larger firms often rely on specialized operators to maximize production efficiencies in focused areas. However, it's crucial to note that while these discussions are well advanced, there is no ironclad guarantee that a contract will materialize. The sources, wishing to remain anonymous due to the confidential nature of these negotiations, emphasized that talks could still fall through. Neither ConocoPhillips nor Stone Ridge Energy provided immediate comment on the situation. Flywheel Energy, which boasts commodities trader Gunvor among its investors, also did not respond right away to inquiries. In April, Reuters reported that ConocoPhillips appointed investment bank Moelis & Co. to facilitate the auction of these Oklahoma assets. This auction is particularly significant as the assets in question were part of a larger acquisition. Specifically, they came to ConocoPhillips as part of its $22.5 billion takeover of Marathon Oil last year. The proposed deal would see Stone Ridge Energy gain control of approximately 300,000 net acres in the Anadarko Shale Formation, which has the capacity to produce around 39,000 barrels of oil equivalent daily, with about half coming from natural gas. This acquisition could significantly bolster Stone Ridge's portfolio. Should this deal successfully conclude, it would enable ConocoPhillips to exceed its ambitious divestment target of $2 billion, a milestone they aimed for after inheriting approximately $5.4 billion in debt from the Marathon deal. In closing, the implications of this sale extend beyond just financial figures. They touch on the broader question of industry consolidation and strategic shifts in energy management. What do you think about this possible sale? Is it a smart move for ConocoPhillips amidst fluctuating market conditions? ***, we'd love to hear your thoughts. Do you agree with the decision or see potential pitfalls? Feel free to share your viewpoints in the comments. ConocoPhillips sells $1.3 billion Oklahoma assets to Flywheel Energy, what it means. In a significant move towards portfolio optimization, ConocoPhillips is reportedly on the verge of closing a deal to sell a substantial portion of its Oklahoma-based assets to Flywheel Energy LLC, a company backed by Stone Ridge Energy. The transaction is valued at approximately $1.3 billion, according to insiders familiar with the negotiations. These sources, who requested anonymity due to the confidential nature of the discussions, indicated that an official announcement could be made in the coming weeks. The assets in question primarily consist of oilfield acreage located in Oklahoma's Anadarko Basin. This strategic sale aligns with ConocoPhillips' ongoing efforts to streamline its operations and focus on more lucrative ventures. However, it's worth noting that while the negotiations are advanced, there remains a possibility that the deal could still fall through. This development raises several intriguing points. Firstly, it underscores the dynamic nature of the energy sector, where companies continuously reassess and adjust their asset portfolios. Secondly, it highlights the growing interest in Oklahoma's Anadarko Basin, a region known for its rich hydrocarbon reserves. But here's where it gets controversial. Some industry analysts argue that divesting from established assets like those in the Anadarko Basin could be a risky move for ConocoPhillips in the long run. They question whether the short-term benefits of portfolio streamlining outweigh the potential long-term losses from relinquishing control over valuable resources. And this is the part most people miss. The success of this deal could set a precedent for other energy companies looking to optimize their portfolios. If ConocoPhillips manages to secure a favorable deal and realizes the anticipated benefits, it might encourage similar moves across the industry. What are your thoughts on this potential sale? Do you believe it's a smart strategic move for ConocoPhillips, or do you think they're taking too big of a risk? Share your opinions in the comments below.